great financial crisis. All right. Okay, so let me provide some background about the financial crisis, okay? You don't have to know everything. I'm gonna give you a lot of details, but I just want you to understand the basic structure of it, okay? So what allowed the great financial crisis to happen is something called subprime, okay? Subprime just means that you're lending money to people who can't pay you back. Okay? In this context, it's lending money to poor people to buy homes. And before, banks didn't want to do that. Okay? But there are certain things that happen to make subprime happen. Okay? So the first thing is that Bill Clinton, he really wanted to increase minority ownership of homes. Okay, he wanted black people to buy more homes. But again, black people were historically poor, so the banks didn't really lend money to them. And that's why Bill Clinton encouraged the government to help minorities buy homes, okay? So that's the first thing. Okay, and this was a noble goal. The second thing that happened, which is more important, is in 1999, Bill Clinton repealed something called the Glass-Steagall Act. And what is this? The Glass-Steagall Act just said that if you are a bank and you take money from depositors, you cannot engage in risky lending, okay? If you are an investment bank, okay, if you're a retail bank, you cannot engage in risky lending. But if you're an investment bank, a private bank, you can engage in risky lending. And so that's what the act said, very simple, okay? It's trying to mitigate risk in the system. But by repealing the Glass-Steagall Act, what you do is you combine retail and investment together. And so these banks now become very large. And once they become very large, they need to create financial vehicles in order to generate more profit, okay? And at the same time, what's happening is that because America has the unipolar moment, everyone wants to invest in America because they think America is the safest place to put your money, okay? So this includes the GCC, the China, Europe and its pension funds, and also Japan, okay? Japan is investing in America because of something called the yen carry trade. And this is one of the dumbest things in the world because at this time in history, Japan is suffering from deflation, right? No one's spending any money. So what the government does is that it lends money out to institutions at 0% interest, okay? Now the institutions are supposed to take this money and promote more liquidity in the system. But instead what they do is they take this money and use it to borrow or buy US treasuries, which provide 5% pay, okay? So you're borrowing money at 0% and then lending it out at 5%. And it's something called the yen carry trade, okay? It's one of the dumbest things in the world. We won't go into it, but again, there's massive money coming into the US financial markets and they need to create more investment vehicles for investors, okay? And they create something called the CDOs, which means collateral debt obligations, okay? But basically it just means subprime, all right? The idea is that mortgages are a good investment because people have to pay a monthly mortgage, right? Therefore, you're guaranteed certain money at the end of the month, okay? The problem, of course, is subprime could lead to default, okay? But at this time in history, no one was concerned about default because of the idea of too big to fail. Which means that, look, the system is structured so that everyone is involved. And if these homeowners default, and the banks default, then the entire economy collapses, okay? So the idea is too big to fail, the system will keep on going because if a certain percentage of homeowners were to default, the entire housing market would collapse. Okay, does it make sense, guys? All right, so this is one big Ponzi scheme. But we know for a fact that in 2008, this system collapsed. And for the longest time, what we believed is it's because the defaults were too many. They were too much. And so the system had to collapse. But if you look at what happened, what you will discover is that's not true, okay? The banks could just choose to roll over the default, okay? Meaning, okay, you owe me $1,000, right? For the mortgage, but you can't pay me. What do? Well, I say, pay me back next month, right? You're like, next month you can't pay me back? Don't worry, pay me back the month after, okay? I can have the system keep on going. Because remember, this system, this money is just based on an illusion. Does it make sense, guys? All right. But it collapsed, okay? So that's something that we're gonna look at today. All right, so as you can see from this map, this chart, at first what was happening was that the government was the one issuing out loans, okay? So the government is basically light blue. But then because this industry was so profitable, private banks started to come in and issue their own loans. And these became very risky loans, okay? And this led, of course, to 2008 when the entire thing collapsed. Okay, all right. So the big question is, why did the financial market collapse? So this is the CDO issuance, okay? As you can see, it's generating a lot of money for these private banks. And then suddenly in 2008, there's this massive default, it collapses. The question is, why did this happen? And again, you're taught in economics class, this is just a law of gravity, okay? If you go too high, you're gonna fall. But what people don't tell you is this. There are actually people who made a lot of money because of the collapse. John Paulson. How much money did he make in this collapse? $20 billion, guys. That's a lot of money. $20 billion. How did he make his money? He made his money by betting that the house market would collapse. You understand what happened? Okay? So think about this. Okay, I lend $1 million to Amber, okay? And every month you have to pay back $10,000. But then suddenly you can't pay me back, right? But if I tell you, Amber, you can't pay me back, you have to give me your home, okay? Then I lose my investment in you, right? So I don't do that. I keep on letting you live in the house, pretend that you can pay me back even though you can't pay me back. But then Vincent says to me, hey, Mr. Jiang, I bet you that Amber will not default on her loan because she hasn't defaulted in the past 10 years. I say to Vincent, how much do you want to bet me? And he's like, $500,000. Okay, he's so confident that you will not default, right? So I say, sure, Vincent, I'll take this bet with you, right? Now what do? Now I make you default because now I can make $1 million from Vincent. And that's how it worked, guys. You think it's a very complicated thing. It's not. It's all a giant scam because only a few people control the entire system. This is how you make $20 billion in this game, okay? There's stupid people buying mortgages from you, right? But then you have even more stupid people who bet that you will not default on these mortgages. And so you take your money from the stupidest people. And that's why the system collapsed. Because you're gonna make more money from collapsing the system than just letting it go on. Okay? This is John Paulson. This is Jamie Dimon. And he also profited from the bank collapse. Why? Because when these banks collapse, you can start to consolidate the banking industry. Okay? So JP Morgan started to buy these other banks that were losing money. And then JP Morgan now is the largest bank in America. All right? Also, guys, look at this. Before 2008, most homes were actually owned by individuals, okay? This is 2008, okay? So So the gray are just individuals. They might have one home, they might have 10 homes, okay? But they're basically individuals. The blue are those who own more than 1,000 houses. And then the dark blue are those big banks that own like 100,000 of homes, okay? So before 2008, you can see like most people were in the gray, okay? These are just individuals. But then after collapse, you see the blue and the dark blue go way up. Why? Because these homeowners lost their homes. And so these banks and these companies can come in and buy them on the cheap. Doesn't make sense. So the great financial crisis of 2008 destroyed millions of lives, but it made it profitable for a few powerful individuals and institutions. Okay? Right. A major consequence. So then you're like, okay, no, Mr. Jiang, you don't get it. It's gravity. Eventually, a bubble has to collapse. Well, okay, today we have two bubbles. We have something called the private equity bubble, private credit bubble, okay, where private banks lend money to private companies. And people say it's $2 trillion. And it hasn't collapsed yet. Why? Because the private banks allow the private companies who are losing money to keep on going. You understand? The private banks don't come and say, hey, you guys are losing money, you should declare bankruptcy, and I'll take whatever you have. Why? Because they would lose a lot of money that way. Okay, do you understand this idea? These bubbles can keep on going forever. They don't have to collapse. Another big bubble today is something called the AI bubble, right? These companies, NVIDIA, OpenAI, their AI products don't actually make any money. Like ChatGPT does not make any money. In fact, it loses money every time you use it, okay? Because it's more expensive to run ChatGPT than it generates in revenue. And it's a huge bubble, but why doesn't it collapse? Because these are just a few companies lending money to each other, okay? That's all it is. It's a giant Ponzi scheme. It's an inside game. So bubbles don't have to collapse. They collapse when it's profitable for a few individuals to make it collapse. All right? Okay. Another idea I want you to understand is that after 2008,